Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorek. It's Monday, May 19th, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Looking at the indexes for the last week, a bit of a mixed week in the market. Looking at the Dow, the S&P 500, NASDAQ Composite, mid-caps, and the Russell 2000, we'll see that we had a week that was mixed. We see minus numbers for the week, and we see a positive number for the week out of the NASDAQ, which had been a bit of a lagger, and so we saw a little more strength out of the NASDAQ during the last week. Looking at our percent changes year to date, we see the Dow barely in negative numbers for the year. We look at the S&P 500 up 1.6% as the large caps lead the way. We look at the NASDAQ is down 2%, and of course we see the mid-cap also in positive numbers. And then when we look at the Russell 2000, our small cap index, we see that it's down 5%, dipped a bit below that 10% correction, and then closed above that 10% level for the week. So no major recessions taking place, and let's take a look at some of the things that are going to take place in the next week. Market's still very near its highs, and did see them again as the week that just went by had all new highs in the market, and we're going to see this sideways move in the market taking place between that 20-day, the 200-day moving average and the all-time highs. Did manage to bring an all-time high again this past week in the S&P. All right, looking at our economic indexes for the week, let's take a look at that. Looking at Monday, May 19th, we see we have very little going on. Looking at Tuesday, again, very little going on Tuesday. Wednesday, nothing of any big concern taking place, so no economic announcements this week that we would expect to move the market any great amount. We got the FOMC minutes coming out at 2 o'clock. Again, that hasn't moved the market in quite some time. Look at jobless claims, 8:30 Thursday morning, and we have that every single week. Find out what the jobs are doing. PMI manufacturing on Thursday, existing home sales, economic leading indicators for last month, all coming out on Thursday. So Thursday is our day of announcements. And then Friday, we have new home sales coming out at 10 o'clock. So not a big week in the market, but if we have any day that's influential, it is Thursday. Let's take a look at the SPX and see what it did during the last week. Looking at the SPX for the last week, we see that we continue in this sideways trend. We did get a new high on Tuesday, and so we're looking at that new high right there, new high, but barely a new high, and then immediately pulled back to that 30 and 50-day moving average. Notice what's happening in these average lines, the 30 and 50 just kind of hovering over each other and staying close. We will run this way for a while. We can expect another dip. Dip could go as far as this blue line, could go as far as this 200-day moving average. But, you know, the thing that we're seeing in the market is we're seeing this sideways, slightly uptrending market taking place. And we could see this take place all summer long as we continue forward with the market showing us good strength and that old rule, don't fight the Fed. Looking at the last week in greater detail, we'll look at a 1 month chart, and we see that as we look at this, we look at the last 5 days. We had a big day up on Monday. We did hit that new high on Tuesday, and then it was a pullback from that right back to our moving averages. Futures down around 5 points as we look at the Monday morning, and we'll see where the market, what the market does this week. Very little economic announcements can certainly float around, and no big news moving the markets at this particular time. Looking at the Dow, let's take a look at the Dow. Dow not showing as much strength as the SPX, and we see that looking at that, We also got a recent high, certainly not the highest high that we've had, and then we see that it pulled back again to that 30-50-day moving average, giving us very much the same look. Looking at the NASDAQ, let's take a look at that NASDAQ, which actually showed a little bit of strength this week. And closed above the previous week's close, and we see that we had a nice little pop up and then the pullback with the rest of the market, and then there we go. Where are we going this week? Is it going to be up? Is it going to be down? NASDAQ very close to that 200-day moving average. Russell 2000, which has been our weakest small index in our small cap index, let's take a look at that. And we see we dipped down below that 10% pullback level, but then popped back up as we closed the week. And so there's the Russell 2000, very close to correction basis, but not quite there at this time. Notice we're getting a downtrend where we've got these the 50 below the 30, and so I'm sorry, we've got the 30 below the 50, and so we're showing weakness actually trading below the 200-day moving average for the Russell 2000. All right, looking at the VIX, what do we expect out of the VIX? Well, we're not showing any great fear in the market as we're down at the lower end, lower level of fear, and so the market just keeps clicking along. Some concern about the valuations of the market, and so earnings will become more and more important as we go from quarter to quarter moving forward. Let's take a look at some of our ETFs and some of the other sectors of the market. Taking a look at the bond market, we're showing that we're working on that uptrend as the bond market just keeps heading on up as we go into the summer. This is really quite typical of the bond market, and as there's money flowing into those bonds as we're breaking into summer. Remember, we're not in the best 6 months of the market. We're in the weaker 6 months of the market, but we're showing no great weakness in the stock market at this point. Looking at gold, no flight to safety, just going sideways, meandering along, going absolutely nowhere. What kind of volume did we have during this week? Well, we got a big volume on our pullback on Thursday, and then just average volume the rest of the week. So there we are. We got average volume as we hit that 30-50-day moving average, which is kind of clumped together in one place. Let's take a look at our financials. We'll look at the ETF, the XLF, and see what our financials look like, and we see that they're not anywhere near their the high that we saw the S&P go to, and so we see the financials just kind of going sideways and showing no lack of strength, but no lack of weakness either. It's just a sideways trending stock. And then finally, take a look at USO, our ETF for oil, and we see that we've getting coming into summer. What do we get? We expect higher oil prices. That's exactly what we're getting as we see the oil price heading higher and going towards that later area of resistance that we saw during the previous quarter. All right, and with that, that's the market as it took place during the last week. For those of you that are gold members, stick around, and we'll look at our stocks to watch. And so this is a Market Forecast brought to you by Options University, and this is Butch Shorek. It's Monday, May 19th, 2014. Trade what you see, not what you think.